How to unlock property investment even if you're new or got poor credit. Finance is always the hardest part of it. Once you've nailed the investor side, you've got the money in. Building a portfolio is actually simple, but did you know you don't need loads of money, you don't need loads of experience, and you don't need a 999 on Experian or your credit history. So let's start with one of my favorite ones, joint ventures. So what are joint ventures? Well, joint ventures are where you are putting in the effort but you don't put in the money. Somebody else funds 100% of it. And you might go, no way, why would they fund 100%? There's no way. Well, I personally fund people's deals on this basis. So what is a joint venture? Well, you are going into a venture on a joint basis, kind of says what it is on the tin, right? But ultimately, there are people with money out there and they're involved in property. Usually, actually, they're involved in property full time, not inexperienced property investors. But maybe time is not on their hands. So, for example, I run multiple businesses. I am working really hard, building it, and my businesses, fortunately, are making more and more and more and more money. So what do I do with that? Well, yes, I build my own portfolio, but there's only so much I can actually buy myself because one of my businesses is facilitating investors. So I can't buy everything, otherwise there would be no business in the first place. So depending on the risk, here's what you're going to look at. Most people do a 50-50. So say it was 200 grand in, your joint venture would put in 200,000. You find the deal, do all of the work, get it all done, and then you split the profits 50-50. In some situations, say it's the first deal that they've done with you and the project is much higher risk, more complexities, then they might ask for more. For example, I've got a joint venture where I'm getting 65%, but I know I'm assuming a lot more risk. Now, the pros of this for you as the individual taking the money is it de-risks you completely because the joint venture partner takes on the financial risk and the burden of that financial risk. The downside of it is you're giving away 50% of your profit, and actually all of the other options usually will be lower. So no money in, zero risk, but given a nice chunk away. So number two, and probably my favorite, is bridging. Bridging is what it says on the tin. It's bridging you from the purchase to the exit, so a different route of finance. So for example, bridge to let is quite a similar or popular product where you are bridging from the purchase to refinancing onto a mortgage, just as an example. And a lot of people really do this for properties that need a fast purchase. So it's not quite as fast as cash purchasing, but it is very quick. But also for creative solutions. So the specific one that I'm about to mention will lend on the property really quickly, but they're basing it on the property alone, not your experience, or a lot of the time, not your credit history. Well, why is this important? Well, if you're watching this and you're new to property, one of the most annoying things when you're getting involved is, why won't anyone lend to me without the experience? Because I can't get the experience without somebody lending to the property. But also, some of you might have something on your credit file from years ago. Well, a lot of bridgers won't mind. And this is where today's video sponsor comes in, Lendlord. Lendlord is completely free as of today. The link is in the description. If you go on there, you can set up your account. And if we jump in right now, you're going to see what I'm actually talking about. But the reason in particular why I like bridging with Lendlord, unlike using a broker, I'm not knocking brokers, I love brokers as well, is that it's actually their funding line. So they are able to make the decisions, which is really important. Number one, from a speed point of view. Number two, from a loan to value, because they will actually bridge based on the value. An example of this is last year I bought a few properties in Netherthorpe Villas. They valued around, I think it was 200,000 each. I got them at 150 and got 100% funding. I would have only got that from Lendlord's bridging. But also, it's good for you if you've got some credit problems because they are making the decision based on the property alone. So I'll show you what they're actually looking like because you're also not paying any broker fees or anything like that. So this is a dummy account that I've set up for the purpose of this video. And what I'm going to do is go down here to finance. So when I'm going on here, I'm going to click bridging finance and you can actually see your open applications in here, which I don't have any, but you can get indicative terms in there. So you go on here and it's so simple to use. So you can see it's pretty decent, 0.61% initial rate. So let's say I'm going for auction purchase and I really want to get this as quickly as possible. I'm going to give them a first charge, which is them having security on the property. I want a loan, let's say 150,000 is what I'm looking for. We're still at 0.61%. Loan to value is going to make it worse, but I want 70% loan to value. Remember, this isn't loan to value like a mortgage where it's worth 150, but you've agreed 100, so they'll give you 75. This is of the actual value of the property. So if you've got a discounted deal, you could actually buy a property with none of your own money, which is incredibly rare. You're then going to go through all of these bits as you're going through. I won't bother going much further in that. But as you're going through here, it's really quick. And what I won't do on this video, but you will experience yourself, is first of all, there's no obligation to sign up, but you will get a phone call within an hour from somebody from Lendlord. Not a broker, not a representative. They work directly with Lendlord and they will be able to talk through the deal in more details and make an agreement on the phone that you can choose to move forward with or not. And it's one of the fastest ways that I have genuinely ever experienced with getting funding. What it also helps with is number 3, mortgages. So what you can then do is go into this, which is just under here, mortgage/remortgage. What really helps with this is they already have all of your information. Lendlord knows what you're doing with the property. They know how you're financing out of the property, and you can use them as a digital online broker. So as it stands, Lendlord does not have their own mortgage funding line, but I know that is something that they're going to look into in the future once they get big enough. But they have access to whole of market lenders with all of this information in the background. And as you can see, you can input all of the data. Are you buying as an individual? Are you buying as a company? You can put the estimated values in there. And let's just click search, for example. And then as I'm searching, it comes up with absolutely every lender that are going to be the best for you. So I've got the mortgage lender, Precise, the Mortgage Works, Keystone, again, and different types, Vida home loans. And this is going to depend on what you're actually looking for. Now, the important thing that I would be looking for on this is how long are you actually looking for it? So I've put 5 years on this, but you might put 2 years when you're on refinance out. But you can see the initial rates, the monthly payment and the fees. So personally, what I'd be looking at, and this is not financial advice, I'm not qualified, but is the total cost over the 5 years. The reason that's so important, by the way, is the mortgage lender's at 4.64%, which means that it's £10 a month lower, but you're paying in £23,305 over a 5-year period. Whereas Precise is 4.79%. You might go, well, why would I do that? It's more expensive. Well, actually, no. Over a 5-year period, you're paying £400 less. And you can see the breakdown overall. The reason I love Lendlord so much is that bridging and mortgages are going to play such a key part in your property journey, okay? And you need to make sure that you're utilizing both. The thing that I love about Lendlord is currently they are the bridger. Eventually, they will be the mortgage company, and it's really great having everything in one place, getting the best rates possible. Yeah, that's interesting, but actually the speed and certainty that you need in order to put in multiple offers on the properties, because ultimately speed and certainty gets you the best deals. And for me, Lendlord is the best for delivering that. And as I said, if you want to use Lendlord, no obligation, you can get access for free right now, and you can click the link in the description, fill in your details and play around with it. And the last one before I show you how to find them in the first place is private lenders. So very much similar to joint ventures that I mentioned as the first one in this video, a private lender is more on a loan basis. So the benefit for this is usually you're going to pay a lower amount. It's a private lender, so they're not as anal about things and going through loads of contracts and all of that, and they'll often ask for less security. Security in property is called a charge, more than likely. So a charge means that they can take ownership of the property if they need to, or some sort of security, and the second charge you've got it after, and a personal guarantee. Personal guarantee is that you are, as an individual, guaranteeing that person's money back. Really important, okay? Now, these loan agreements are very much one way. What I mean by that is, let's say I loan you £100,000 and I say, hey, I want a 10% return on that 100,000. It doesn't matter if your project does well or doesn't go well, you need to pay that back. Okay, so it's great for the investor to de-risk in a way. Of course, if the project goes so wrong that you can't pay it back, then what can you do, right? There is that air of risk in there. So what are the pros? Well, the pros for you are the fact that you can get the money from there without going to the establishment, to the bank, doing all of loads of credit checks, stuff like that. Often they care about the property, not you, which is great if you got poor credit. And of course, it's very simple. You get the money, you pay them a return, and everything else is yours. The other benefit is that's usually a lot cheaper than other types of finance. The downsides is that you are assuming the risk of a loan. So I mentioned a joint venture where the funder takes all the risk. When you are getting a loan, actually you are taking the risk on. So you are agreeing, irrespective of how well this project does, you, sir, Mr. Mrs. Investor, will get paid back with interest. So how do you actually find these people? So many people give such vague answers like, go on social media, go out networking. It's like, well, yeah, thanks. That's basically going to put yourself out there. But actually, I follow something called the ACE system. So ACE. First of all, I go out there and I build awareness. So this is what people would be saying, the one-to-many. So for example, YouTube. You're watching me, but you're not the only person watching me right now. Hopefully thousands of you are watching me. Who knows? That's just my ego getting in the way. But it could be Facebook, it could be LinkedIn, it could be networking events. Build awareness of who you are, what you do, and how you help people, and most importantly, how they get in touch with you. Awareness. Next is communication. The benefit of this channel is it's one-to-many. The downsides of YouTube is it's one-to-many. So you get to watch me, you engage with me on the comments, that's great, but we're not really chatting. So then the next one is communicating. So I might say, by the way, if you're watching this video and you ever want to actually just chat one-on-one with me, go over to my Instagram, and then I might go, Instagram handle here, Jamie York Official. So go over, give me a follow, send me a DM, let's have a chat. And then the E is extraction. So within a few messages, you want to find out, is this somebody you can work with? Ask for their email and phone number, give them a ring, and they've become a lead. So follow the ACE method of awareness, communication, and extraction, and you'll get there. So what's your favorite? I don't know. My favorite personally is using something like Lendlord. As I said, I absolutely love Lendlord because it's a free platform. You can go on there, you can check what's available, and it doesn't matter in your credit, anything like that. Is it going to be the cheapest finance? No, but it's going to be fast and it's a person on there. And as I said, the great thing about them with their bridging, for example, is it's actually their funding lines. And by the way, like I said, you can get on there for free with the link that I've got in the description. Upload your portfolio, look at all of the finance options, and it will blow you away. It is free at the time of filming this video, so click the link, go on there, set up a profile, and it will blow your mind. But hey, that's just my favorite out of the list. Each one comes with pros and cons. Let me know in the comments, what's your favorite funding line and why? If you got value from this video, make sure to hit the like button. Let me know what you thought in the comments. And if you're watching this for the first time, this channel, you're new to the channel, you want to watch more videos like this, make sure to hit the subscribe button and the notification bell, and I hope you enjoy the next video.